Let's just quickly start over to record it for those that will miss. I see 2 or 3 are not here. Our audio was not active as when we started. Okay, I'll mute you all. All right, I'm starting over now. Okay. All right, greetings to you all. My name is Silta. I will be your Forex mentor from tonight. Okay. In this session, we are going to look at the introduction to Forex trading. That is, we are going to start from scratch, where we are going to answer the 5 W questions. What is Forex trading? That is what we are going to start with. And then we'll look at who trades Forex. That is the second thing we'll look at. And then why should you be trading Forex? And then when can you trade Forex? And then where can you trade Forex, or how can you trade Forex? Then the last part we'll look at is how can you trade Forex. Okay, these are the basic questions that we will start with. So this is the only session that you will need for you to really have an idea or understand what Forex is and how does it work, how to get started, and all those questions you have been wondering. Okay, you're all welcome to our institute. It's one of the best Forex institute we offer. It's one of the best Forex institute that offers the best Forex education you will ever come across. Okay, what you can expect from this course is you should expect to understand the theory of what Forex is, how does it work, and then you'll also expect the Forex terminologies and the Forex language, pips, lot size. So from this course, you will be able to speak the Forex language. So we are going to have about a month of theory, 1 month of theory, where we'll look at all the aspects or all the theoretical things that you will need to know. That is, this whole month of April, we are going to deal with theory, starting with the introduction to Forex trading that we are starting with tonight. Then we'll move to technical analysis. Then we'll move to, later I'll move to fundamental analysis. Then as well as psychology and money management and all the other things that you will need. Then starting next month, we'll have a full month of practical. Practicals is where we are going to apply what you are studying in this course. We are going to fund an account of 100 USD, then we trade on those accounts together. Without wasting time, let's move forward to start with what is Forex trading? This is the first question we will answer. So what is Forex trading? Okay, so Forex, it basically, so Forex basically involves buying and selling of currencies on the exchange market. Can we please not write on the board? Okay, all right, thank you. So Forex trading involves buying and selling of currencies on the exchange market. So if you write the word foreign exchange, that is from the word foreign exchange here. If you can take these first 3 letters, FOR, and then this one, EX, you can combine it to form the word Forex. So in short, Forex is basically foreign exchange. Okay, like we can see in this image, we have 2 people that are exchanging the US dollar with euros here. So the goal of Forex is to profit from fluctuations in the currency exchange rate. That is our goal. And then we move to buying and selling of currencies. Okay. That is, currencies are traded in pairs. For example, you take the euro, you pay it with the US dollar, and then you have the USD that stands for US dollar, and then JPY. So this is a pair USD versus Japanese yen. And then you have the GBP that stands for the Great British Pound versus the US dollar, etc. These currencies are traded in pairs. For example, you have the euro versus the US dollar. Let's assume, for example, say the euro versus the US dollar is trading, or its exchange rate is trading at 1.2. And then this, you call it a currency pair. What you have here, you call it a currency pair, euro and the USD. You call it the currency pair. And then this part on the right, you call it the exchange rate. That is the actual exchange rate. So you have a currency pair on the left, and then you have an exchange rate on the right at 1.2. So this means, how do you interpret this? This means 1 euro. If you give 1 euro, you will be given a 1.2 US dollar. That is how you interpret the exchange rate. Okay. We will later look at what is known as the base and the core currency, whereby this currency on the left is known as the base currency. Then this one on the left will be known as the core currency. This one on the left will be known as the core currency. Okay. So these currencies are traded in pairs, okay, by simultaneously selling your euros, like we have in the picture, and buying the US dollar. You are engaging in a foreign exchange transaction. Let's assume you want to travel and you wish to exchange your euro, for example, to US dollar, like we can see in this picture here. So in this case, if you do this transaction, you are actually involving yourself in a foreign exchange transaction. Okay. That is, exchange rates determines the value of one currency relative to another currency. Okay. In general, the exchange rate of a currency over other currencies is a direct reflection of the condition of that country's economy compared to other economies. We are going to look at fundamental analysis, where we are going to compare how does one's economy can be compared to the other currency's economy to determine their value. So for example, we have this exchange rate of euro versus USD at 1.2, like we started. And then we basically buy and sell this currency, or we trade by buying and selling these currencies. So when you buy a currency, you are expecting the value of the euro to appreciate. That is when we usually buy and sell. When you buy a currency pair, for example, if you buy euro USD, you are expecting the value of the euro of the currency that is on the left to appreciate. And then you're expecting the value of the currency on the right, in this case USD, to depreciate. And the opposite also holds. That is, when you sell this currency pair, you are expecting the currency that is on the right to appreciate, and you're expecting the currency that is on the left to depreciate. Okay. And then understanding currency pair. So there are hundreds of currency pairs in existence, but not all can be traded in the Forex market. So the United Nations currently recognize 180 currencies in existence. So if you were to pair each currency up with another, it's quite a lot. Né? So let's just look at the category of the currency pairs and which ones are mostly traded. We have the major currency. We have what is known as the major currency, the minor currency, and then the exotics. Okay, so the major currencies, these are the most traded currency pair, the ones that we mostly trade most of the time. Those are what are known as the major currency. So for example, we will be trading, or most of us, the majority of traders trade the exchange rate between the euro versus the US dollar, and then the US dollar versus the Japanese yen. And then we have the Japanese yen versus US dollar. So US dollar versus the Canadian dollar, then the US dollar versus the Swiss franc, then Australian dollar versus a US dollar, and then the New Zealand versus the US dollar. So all these, these are the most frequently traded pairs, and they include the US dollar in them. They all have US dollar either on the left or on the right. These are what are known as major currency pairs. So major currency pairs are the most traded and they include the US dollar. Okay, and then the next category that we will look at is the minor currencies. So minor currencies, these are the more frequently traded currencies that do not include the US dollar in their pairing. For example, all these minor currency pairs, the likes of euro versus the Great British pound, and then the euro versus the Canadian dollar, and then the Great British pound versus the Japanese yen, and then the euro versus the Swiss franc, as well as the euro versus the Japanese yen. These are known as the minor currency. They do not have USD in them, and they are known as crosses or minor currency pairs. And then last but not least, we have the exotic currency pairs. These are pairs. These pairs include at least one currency from a developing or emerging country and are less traded than the major currency pair. For example, we have South Africa. It's a developing country. So the South African rand, it's one of the exotic currency pairs. Okay. And then so these are pairs that include at least one currency from a developing or emerging country and are less traded than the major currency pair. So exotic pairs are characterized by lower liquidity, meaning only few people participate in trading this currency, and increased volatility compared to major currency pair. And at any time, they can really move very crazy. That is, they can be highly volatile. The examples of the exotics, these are the USD, and then we have the TRY, Euro, the ZAR, that is the South African rand, and then the GBP, and then the MXN, that is the Mexican Peru, etc. Those are exotic pairs. Are we following?
Yes.
Okay, those are the exotic pairs that we will mostly be trading. And then who can trade the Forex market? That is the next question that we will answer. Who trades the Forex market? That is the next question we will answer. Okay, and then Forex market are mostly traded by ECN brokers. That is the electronic communication networks. These are the brokers that are linked to the electronic communication network. Later, we'll look at what is electronic communication network. And then we have the banks, big banks. We have banks. They also trade the Forex market. Then we have me and you, who also trades the Forex market. And then we have Reuters machine. We have now these days we have what's known as high frequency trading. This is people are now, not people, institutions are now trading using machines or computers. For example, Reuters machines. They also trade the Forex market. And then we have the market makers. These are the banks that we look at, known as market makers. We as well as we have Father Bernard that also trades the Forex market, Uncle Pau, Sister Bettina, Grandpa, Sister Maria. So in short, everyone can participate or can trade the Forex market. Okay. Then understanding the Forex market structure, we have the super bank. The super bank, these are the powerful banks that influence the Forex market or that can impact the Forex market. The super banks, this is a group, this group of super banks, it consists of largest banks and financial institutions. That is consists of large banks and financial institutions in the world. The participants of this market trade directly with each other through EBS, that is the electronic broking system, and Reuters machine. So this category of banks, they are known to be trading against each other. They do not like to trade with small traders due to a high risk. They consider a small trader that there's a high risk, and the capability and small traders do not have capabilities to really trade or into millions and billions. These ones, they trade with billions, and they only prefer to trade with each other. These are the super banks. These are the banks that we mostly refer to, or these are the banks that we mostly refer to as they are trading against us. This is the group of the super banks. So most of the time in Forex, you feel like, no, institutional banks, they are trading against us, institutional traders. That is a group from this category of super banks, okay? And then collectively known as the interbank market or the interdealer market. This is the super banks. So a list of them, we have some example. The Citicorp, it's a super bank, one of the super banks. And then JP Morgan, very famous, one of the most powerful banks that we have. And then the UBS, this is the group of banks from Switzerland, Swiss bank. Most of us, we trust the Swiss system, one of the most secure systems in the world when it comes to the banking systems. That is the group of banks from Switzerland. And then we have Barclays. Barclays is one of the big banks that we have out there. We have probably seen it on sports. It sponsors a lot of sport activities. And then we have the Deutsche Bank. Then we have the Deutsche Bank, and then we have the Goldman Sachs. It's one of the super banks that we have. And then the HSBC, and then the Bank of America. When we will be saying banks that trades against the small traders, or when we will be referring to institutional traders that trades against us, you will hear a lot of this in the industry. We will be referring to these banks that we have listed here. Moving forward, these banks, they are responsible for most of the daily trading volumes. These banks are the ones that move the market most of the time, okay? And they make their money by acting as a market maker. These are the banks, like I've indicated, that will be complaining that they are hunting our stop losses, known as market makers. So it's these banks, okay? This means they are constantly buying and selling currencies, pocketing the difference between bid and ask price, known as the spread. We're gonna look at the spread later. And then the next category of traders that we have, that is the hierarchy of Forex participants. So second on the list, we have the electronic liquidity providers. These are the banks that gives us that provide the quotations, or these are the banks that provides the quotes or the prices. Okay, this is the middleman between buyers and sellers in the currency market, constantly quoting bid and ask price for various currency pairs. So the prices or the exchange rates that we mostly use, they are quoted by this category known as liquidity providers, and then ensures that market participants can find counterparties for their trades. Let's say, for example, if you want to buy, there have to be a seller that is willing to sell to you. And these ones, they ensure that whenever you want to buy, there is a seller that they can match you with. And then when you want to sell, there is a buyer that they can match you with. So allowing for faster execution and reducing the potential impact of market volatility. Okay, these are the electronic liquidity providers. And then example of the electronic liquidity providers are the Citadel Securities, the Flow Traders, HC Tech, Jump Trading, V2 Financial, and XTX Markets. So these are the liquidity providers. And then we have the large commercial banks. Large commercial banks, they also participate in the Forex market. These are the companies that do business. That is, companies that do business internationally need to buy and sell currencies to pay for their goods and services. If you have a big company and you want to go and do your business outside, you need to go through a commercial bank like FNB, for example, or Bank Windhoek, for you to go and exchange your money before traveling or when you want to settle a transaction in a foreign country. So they also participate in the Forex market. So this company takes part in the Forex exchange market for the purpose of doing business, for business purpose only. For instance, Apple, okay? Apple must first exchange its US dollar into Japanese yen when purchasing electronic parts from Japan for its product. You know, the Apple product, let's say a smartphone like this one, it's an Apple product. Their parts, the part that this phone is made comes from different countries. So when purchasing these parts, whichever part they want to purchase from a certain country, they go through commercial banks for them to do that electronic purchase or the transaction. Okay, so the commercial banks handles that transaction. And then since the volume they trade is much smaller than those in the interbank market, this type of market player typically deals with commercial banks for their transactions. Okay, so they may not be trading for profit, but their currency needs can still have a significant impact on the market. Then number 4, we have government and central banks. Our central bank is the Bank of Namibia. It also participates in the Forex market, not necessarily for profit, but for economic reasons. And then just like companies, national government participates in the Forex market for their operations, that is in international trade payments and handling their foreign exchange reserves. So governments and central banks, they also do participate. And then central banks are like puppets or the masters of the Forex market. Why? They are responsible for implementing monetary policies that can move currency values. They are the ones who adjust interest rates and controls the money supply. We are going to see later how interest rates affect the market or affect the exchange rates of the market when you look at fundamentals and how these government and the central banks affect the exchange rate of a currency pair. So by doing this, they can affect currency valuations. And then let me just mute you. And then we have the speculators. So speculators, this is me and you. We are known as speculators. Speculation in the Forex market involves the buying and selling of currencies with a view of making profit. That is, me and you are under the category of speculators. We basically participate in the Forex market with the intention of making profit. Okay? So it's called speculation because of the uncertainty involved, since no one really knows when will the market go up or when will the market go down. So we all just speculate, okay? So these are hedge funds and prop firms. I'll later, those that will really be committed, I'll introduce you to prop firms. Prop firms, these are just institutions that are willing to fund traders with proper skills to trade. And then in prop firms, so the smart money in the individual retail traders who trade currencies from their home, computer, smartphone, and tablets. So this is where we fit in. We are under speculators. We basically trade the Forex market for profit reasons. And then why? Why should you be trading Forex? That is the next question we will have to answer. Why should you be trading Forex? So Forex trading offers various benefits and advantages. And here are some of the reasons why a large growing of individuals are opting for this market. This is the reason why there's a high interest developing in the society that everyone wants to participate in the Forex market. In the Forex market, there are no commissions, meaning there are no extra charges. If you deposit $100 and you make a 1,000, the whole 1,000 is yours. You can withdraw it and no one is going to charge you. Okay, there are no commissions in the Forex market. Low transaction costs, that is the cost of doing the business. It's very, very small. You can you can really operate with less stress on extra charges and funny charges. And then accessibility. You can access the Forex market from the comfort of your home on your smartphone or on the computer. That is one of the advantage. And then no one can corner the market. No one can control the Forex market for a prolonged period of time. That is one of the advantage. No one controls the market. There is no boss here. And then we have leverage. Leverage is the ability to make more money than your deposit. And Forex offers very good leverage or an edge for you to make more money than your deposit. Transparency. So everything here, you can see how you are making money. You can see how you are how you are losing money. So everything, you are in control. You are the boss. Okay. And then diverse trading options. You have a lot of options on what to trade. You can trade. There are a lot of currencies that are out there that you can participate or you can trade. So and then you have free stuff everywhere. Everywhere you go, there is free education. There is free educational material on YouTube. There are textbooks out there. There are websites that are teaching Forex for free out there. So there are a lot of free information. Free informations are out there. And then any other, we have a lot of advantages on why should you be trading Forex. Okay, now that you have an understanding of what is Forex, who makes up the Forex market and why you should trade it, it's about time you learn where can you trade the Forex market. Okay, where can you really trade this Forex market. Okay, that is the next thing that we will look at. When, that is the time that you will have to trade the Forex market. The Forex market is open for 24 hours a day, 5 days a week. The Forex market, it's open Monday morning to Friday evening, allowing traders to participate from different time zones around the world. So basically, the Forex market is open 24-hour Monday to Friday. Okay. So when can you trade Forex? This is what is known as the trading sessions. The Forex market usually opens with the Sydney session. This is the Australian session, and then the Tokyo session, and then we're going to look at the sessions later, and then the London session, and then last but not least, it's the New York session. These are the sessions that we have up there on our on those clocks that you see. Those are the trading sessions that we have right there. That is the Sydney session, the Tokyo, the London, and the New York session. Okay. And then moving forward, understanding the 4 trading sessions. The Forex market. But before we start, what is a trading session, so to say? A trading session, if we say the Sydney session, the Sydney session is the Australian session. This is the session when This is the session when businesses are open in Australia. What do we mean by that? Since if in Australia, the duration or the time when they are active, you know how our time is. When they are active during that time, we might be sleeping this side. So what we have is the session when the Australian people are active and they are at work and their banks are operating. That is what we know as the Australian or the Sydney session. So the Forex market usually starts, or the day in the Forex market usually starts, or it's started by Australians, known as the Sydney session. During that session when they are active, there are a lot of transactions going on in their banks. Okay, so what will happen is if you are trading the Australian dollar, that is the time that you can expect the Australian dollar to really move a lot. Okay, the same goes with the Tokyo session, that is the Japanese session. That is the duration or the period when the Japanese are in their offices making transactions. And that is the period that you can expect the market to really move if you are trading the Japanese yen, followed by the London session, that is the UK session. So that is the time or the period when people are very active in UK or in London. That is the session that you can expect the Great British pound to move if you are trading the pound. Then last but not least is the New York session. That is the session when Americans are awake. They are in the offices. It's morning to them or it's the daytime to them. They are making bank transactions or they are making transactions that can affect the US dollar. That is what the session means. So throughout the day, throughout this 24 hours, you know how the world is. When we are sleeping, these ones are awake. When we are awake, some people are somewhere there, they are sleeping. So the Forex market usually begins with the Sydney session, okay? That opens at 7 o'clock, that is the standard time. In our local time, it opens at 11. So meaning, for us, the market opens at 11 o'clock on Monday. That is the time it starts with the Sydney session. For them, it's 7 o'clock in their country. You get it, okay? It opens with the Sydney session, and then later, it's followed by the Tokyo session. That is, it's followed by the Tokyo session, which then opens at 9 o'clock. And then with our local time, it's down here. Our local time, it's down here. For us, it will be 1 o'clock in the morning. It will be 1 o'clock in the morning. Okay, for us, it will be 1 o'clock in the morning, then followed, and then the Sydney session that has opened at 23, it will close at 8 o'clock in the morning. Let's just use the bottom line, that is the local time. It will close at 8 o'clock in the morning, and then followed by the London session, which opens at 8 o'clock in their local time. And then for us, it will be 9 o'clock in the morning. So the London session opens 9 o'clock local time or Namibian time. It will open at 9 o'clock. And then the Tokyo session will then close at 10 o'clock in the morning with us. And then followed by the New York session. The New York session starts at 1 o'clock with us in our local time. And then the London session will then close as the New York session is opening. So the London session will close at 6 o'clock in the evening. Now, as we speak, we are still in the New York session. So the New York session is still active, which will go until 10 o'clock or 2200 hours. So we are now in the New York trading session. Okay, moving forward, when can you trade Forex? When can you trade Forex? That is until Friday. There are no time during the week when the market formally closes, although there is a brief lull or there's a brief lull. That is, the brief lull is basically just a break, a short break that usually happens in activity between 19 and 22 GMT. That is, we are 2 hours ahead of the GMT. This is usually between, with our local time, it's between 21 to midnight, when most American traders have gone home and most Kiwi, that is the New Zealand and the Australian dollars, are getting ready for work. Okay. Other than the weekends, the market closes weekend. The Forex market is usually closed weekends, except for the derived instruments. We're gonna talk about derived instruments. Those ones, they never sleep. Even weekends, you can trade them. So other than that, there are just 2 public holidays when the entire Forex market closes. That is the only 2 public holidays the Forex market closes. It's Christmas and New Year. All other holidays, the Forex market never closes. They are ignored by the Forex market, okay? That is, although the Forex market is open 24 hours, there is no way you can trade all the sessions. So at the end of the day, who does not sleep? You need to rest, you get it? So if you could, why would you trade throughout like a robot? You get tired and you need to rest. Besides, sleep is an integral part of a health lifestyle. So what is the best time to trade? What is the best time can you trade? So the London session, it's the busiest of all the sessions. So that is the London session. It's this session for us that starts from 9 o'clock until 6 o'clock. So for us, not for us, but this session, we are very lucky to happen that the London session from 9 o'clock until 6 o'clock, it's the busiest session to trade. That is, this is the time that the market will be moving a lot. And then that is the busiest session you will be trading. And the London and the New York session overlap. That is where this London session meets the New York session. This session, and where the Tokyo session, that is the Japanese yen, meets the London session. This is what are known as overlap. And then the London and the New York session overlap is believed to be the busiest period in a trading day. So meaning the time from 1 o'clock to 18 o'clock, this will be the best time that you should never miss when you are trading between 1 and 6 o'clock in the evening. Because this is the busiest trading session. That is the best time to trade actually. Or that is the time not to miss trading. That is the overlap. Okay. Then moving forward, and the best days of the week to trade, they are believed to be Tuesday, Wednesday, and Friday, that they are supposed to be, not supposed to, they are actually the busiest and the best day to trade the Forex market. When you are trading, you should never miss Tuesday, Wednesday, and Thursday. Okay, and then where can you trade the Forex market? That is the next question we'll answer. Forex trading is everywhere and it's decentralized. You can trade Forex market from the comfort of your home over the counter, meaning you can trade it without a physical exchange. All you need, therefore, the Forex market operates without a physical exchange or a regulator. All you need is a stable internet, your smartphone, and a computer to trade the Forex market. How can you then trade the Forex market? What you need is a computer or a smartphone or both for you to get started trading Forex. And then you need proper education. This is what we are busy with now. I'll give you proper education, or we will give you proper education. That is the second requirement that you need to trade Forex, proper education. And then third, you need to open an account with a broker. A broker, we have a lot of brokers out there, like Derry. For those of you that doesn't have a trading account, I'll drop a link in the description below where you can click and open an account, and then a step-by-step guide on how to open an account as well. I'll drop it. We have a lot of brokers like Derry, XM, XNES. There are really a lot of brokers out there that you can open an account with to start trading. First, Yeah, and then third, you need to open an account with a broker. So a broker is an intermediary that facilitates the buying and selling of currencies on behalf of traders. These are the institutions that will be buying and selling on our behalf, okay? A Forex broker helps you access the Forex market and executes your trade. So we trade through a broker or a dealer, okay? And then the fourth part is you need a trading software or a trading program or a trading platform. And the famous trading platform that we have is MT4 and MT5. So now most of us will use MT5. And then you also need a free demo account, which you can get from your broker. For those of you that do not have a demo account, I will assist you in creating this account. And then the other thing that you need is to develop your trading plan. That is these are the other things that you might not understand for now, but you need to find your time frame and define your strategy or the rules of engagement on how you'll be trading. You have to set your target. These are things that you learn at advanced stage, and then defining your risk tolerance, your entry and exit points. You might not understand this, but we'll get to it later. I'm just walking you through. And then write your Forex trading system rules down and always stick to those rules. So once you have practiced enough on a demo account is like a practice account that uses paper money. The broker will put money in that account that you can use to practice. It behaves exactly like a real account, just that if you make money from that account, you cannot withdraw it. And if you lose money in that account, no one is going to follow you. So it's just a practice account to simulate the real market. So when you are ready and you have practiced enough on a demo account, you have gained some confidence, that's the right time to fund and start trading on a live account, okay? So in short, to get started in Forex trading, this is what you need. First, you need a computer or a smartphone, then proper education, then you have to open a trading account, install the MT5 platform on your computer. You need a demo account to practice on, and then a trading plan. And then from there, you need trading capital. This is money that you fund to start trading. You can start trading with any amount of your choice, even a $5. There's really no limit to minimum or maximum to what you can start with. You can start with any amount. And then yeah, thank you for staying until the end. So the next topic tomorrow, it will be on MT5 orientation. That is, I'll walk you through the MT5 app. But before that, I want us for tomorrow, I want us to create our trading account. Then we'll log you into the trading accounts. Then later, I will log in with those trading accounts to the trading platform. Then from there, we'll move forward to how to use the MT5 platform. Okay, yeah, but that is what I had for you tonight. Hope you understand what is Forex trading, where can you trade it, who trade it, and how and when. So that is what I wanted us to cover tonight. Yeah, now it's Q&A sessions. If there are questions or comments, please come through now. Is it clear? What is Forex, when, who, where, how to trade it? Do you understand those points?
To me, it's very clear. Thank you.
All right, great.
Sir, I have a question, sir.
Sure. You may ask.
Okay, everything is clear. But can you just please repeat on what a broker is and what they do exactly?
Okay. These are brokers. Ne? I'll explain it without a slide. When you want to open a trading account, you open an account. You open an account through a broker. What is a broker? A broker is like an institution. These are like banks that where we can go to. We open a trading account. This is an institution that will connect us to the Forex market on our behalf. Meaning, when you want to trade, you open an account with them, and they are a lot. Just like we have a lot of banks, like commercial banks. We have FNB, it's a bank. Bank Windhoek, it's a bank. So these brokers, they are also a lot. Let me just call them banks that you can trade through them, not this FNB. For example, Deriv is a broker. If you want a trading account, you go to their website, deriv.com. You sign up for an account. You sign up for an account, and then you will have an account with them. When you want to deposit, you go on that account, on their website, you log into your account, you deposit. Let's say if you want to deposit $100, you will then deposit $100 through their website, and then you download the MT5 platform. That is the application that you will use to trade. On that platform, you log in with the details that the broker will give you. When you create an account, the broker will give you a login ID and a password. Then you log into that MT5 with the details that you get from your broker. When you are trading, let's say when you buy and sell, when you click buy, the broker will be the one that will be buying on your behalf, meaning the broker will be the one that will link you through them. They will link you to the Forex market. So basically, brokers, they are like middlemen between us and the Forex market. There are institutions that can help us, that we can trade through them. We can trade Forex through them. I'm not sure if it's clear there.
Crystal clear, sir. Crystal clear, sir.
All right.
Thank you.
All right. Any other question? All right, if you have any question, I'll add you to, there are two groups that you will be in. That is the April intake. This is where we'll be communicating our lessons and our time, but our time is fixed. We keep it 8:30. Eh? And then I'll add you to the main group. The main group is where you are going to meet the senior students, those that have completed the program. And I will not want you to actively participate in their activity, the trading activity, because you might get confused. So let's just wait until when you are done with the program, especially the theory part. Then comes next month when you are going to start with practical. That's when you can now mingle and engage with them. But for now, you can just observe. And I'll as well drop you some materials. That is the textbook that you'll use, as well as the textbook that you'll use, as well as any other materials that I'll see relevant. I'll drop it on the group. For tonight, I'll as well drop the link on our group for us to create an account and the PDF step-by-step guide for those of you that doesn't have a trading account. But we'll still start with that part tomorrow. For those that will get stuck, I'll assist you create your account step-by-step. Yeah, but if you don't have any other questions, then we can call it a night. We meet again tomorrow, same time.
Sure.
Thank you, sir. Enjoy, sir.
All right, likewise. Good night.
Good night.
Thank you. Thank you.
Cheers.